Been trying to get this business right for some years, but who really cares? Incorporated my company with 100 million shares, but who really cares? I taught myself to wholesale real estate in about a year, but who really cares? My trust revocable for the benefit of a chosen few, but who really there? Who really there? You? Welcome back, YouTube. It's your man Wilk. It's Real Estate and Lifestyles channel, Corpsumer Inc. Today's episode is going to be about the negotiable instruments and the banking crisis. Let's get right into it. So, as we said, negotiable instruments. A negotiable instrument is a signed document that promises a payment to a specific person or assignee. Negotiable instruments are transferable, which allows the recipient to take the funds as cash, then use them as preferred. Examples of negotiable instruments include checks, money orders, and promissory notes. Negotiable instruments is a document guaranteeing the payment of a specific amount of money, once again, either on demand or at a set time, whose payer is usually named on the document. Now, requirements for a UCC negotiable document or a negotiable instrument. It must be in writing, as we mentioned. It must be signed by the maker or drawer. It must be an unconditional promise or order to pay. It must be for a fixed amount in money. It must be payable on demand or at a definite time. It must be payable to order or bearer unless it is a check. And that last one again, it must be payable to order or bearer unless it is a check. So it's very interesting. A lot of people really only deal with the order instrument and in the form of a check. And like we all are familiar with like how to write a check. Even in school, they tell us like to write a check is like paid to the order of. But you know, there's other ways that you could negotiate instruments, and a bearer instrument is similar to an order instrument, but we'll get into that. So let's continue on. So the main characteristics of a negotiable instrument, it's easily transferable. Okay, a negotiable instrument is easily and freely transferable. So it must be in writing, as we mentioned again. All negotiable instruments must be in writing. The time of payment must be certain. If the order is to pay when convenient, then such order is not a negotiable instrument. Okay, so this may sound like redundant, but you know, if you actually pay attention to what you do on a day-to-day basis, you'll realize that you use these instruments on a day-to-day basis. What is the purpose of a negotiable instrument? Again, the purpose of a negotiable instrument is to transfer funds from one entity to the other. The term negotiable refers to the fact that the note can be assigned to another party, and once transferred, no additional demands or stipulations are made on the bearer of the document. Okay, so just keep that in mind if you plan on transferring any docs or plan on transferring any bearer instruments or any order instruments, things like that. Name 3 types of negotiable instruments. Okay, so according to Section 13 of the Negotiable Instruments Act of 1881, negotiable instruments are a promissory note, bill of exchange, or check payable either to order or to the bearer. Okay, so there's actually an act that, you know, actually enforces how to utilize these instruments and where they can be presented and where they will be acceptable. So definitely something to take heed to at this point with all the things going on in the banking system, with the banking industry, with the banking crisis. Negotiable instruments and the knowledge of these instruments could definitely help us maneuver with funding and trading opportunities with one another. I think, so definitely, and then also having laws to back these promissory notes, these bills of exchange, the payable to either order or payable to the bearer, like these things are definitely necessary to know and can be a very useful tool in these times, if you ask me. And I think like the main thing right now is about just going back to understanding the simple systems first and how they were able to, be infused into the community. And, they evolve into these complicated systems that we're used to now, like with this credit card stuff and all of that. Initially, these were simple laws. All you had to do was write something on a piece of paper, and depending on the language, the person accepting and receiving would know exactly what it is that we're referring to or which direction, as far as being able to recoup funds and just being able to be paid later on, things like that. So it's definitely important. Again, so possession of negotiable instruments. Okay, a holder is one who has possession of and is entitled to enforce the instrument. Again, I'm going to say that again. So a holder is one who has possession of and is entitled to enforce the instrument. So a person who is named as payee and possesses an instrument is a holder. If the commercial paper is not payable to a particular person, an example, it's payable to anyone in possession of the paper, then anyone who has possession of the paper is a holder. So negotiable instruments, they serve two different functions in commercial transactions. A credit function and a payment function. Okay, I'm going to say that again. So negotiable instruments serve two different functions in commercial transactions. They serve a credit function and they serve a payment function. The credit function allows negotiable instruments to be used to obtain credit now to be repaid out of future income. It's very interesting because a lot of our complicated systems now are set up around these very simple terms and systems. So you know these are things that we can make them better, or we can have them use them on us in the worst way. I feel like so we can, if we know what these things are, then I think that we would be a lot further with wanting to work with each other and wanting to trade and barter for things of so-called value. Again, so let's get back into it. A bearer instrument is a document that entitles the holder of the document to rights of ownership or title to the underlying property. In the case of shares or bonds, they are called bearer certificates. Now, what are the differences between instruments to bearer and to order? An order instrument must identify a named payee on the payee line, and a bearer instrument, on the other hand, does not include the name of the payee on the instrument and will typically not have a payee line. A common example of an order paper is a personal check. And we mentioned the personal check earlier because more or less that's what we're all trained to know. And that's what they teach us to write, even as a young, person trying to write your first check and things like that, open up your first bank account. They try to tell us that the pay to the order of is the only form um, of a, well, I mean, it probably is the form of a check, but at the end of the day, is the only form of negotiable instrument that we can utilize, I would say. Um, Now let's get back into it. Is cash a bearer instrument? Cash, physical currency, is a common example of a bearer instrument. Whoever holds the cash can use it to make purchases or exchange it for goods or services. Bearer bonds, these are debt securities that are payable to whoever holds the physical bond / birth certificate. Is Bitcoin a bearer instrument? In practice, Bitcoin functions just like a digital bearer instrument. Just like anyone can transfer ownership of a physical bearer asset, they can also transfer ownership of Bitcoin. Bitcoin is truly a new form of money, a digital bearer asset that is the first of its kind. So this is my first time actually even thinking about Bitcoin in this way, to be honest. I always used to just think about it how it was just, compared to Dogecoin, and just how it's, you know, just something different, and just something that I just didn't understand as far as like what it was backed by and things like that. But, now that we understand that it's actually a bearer instrument, it kind of makes a little more sense to me, if you ask me. Um, and again, leave a comment if you know a little bit more, or if you know a lot more. I'm not an expert at any of this stuff. I'm a student, so I'm just sharing this information just to shed some light on the current events that's going on, and basically to give people an idea to look for other ways and other instruments that we could utilize for funding and for trading and for bartering purposes. So bearer shares are banned in some countries because of their potential for abuse, such as tax evasion, movement of funds, and money laundering. The United States ended federal tax deductions for interest paid on bearer bonds in 1982. That's very interesting. So that lets you know that prior to 1982, that there were interest being paid on bearer bonds. So maybe if that was a good idea then, it could be a good idea now. You know, just to I'm just throwing it out there. But again, I'm no expert. I'm no stock market guru, anything like that. I'm just a guy that's looking to further his potential, and add a little more value to myself. So yeah, if anyone has some information that can help out, that can add on and shed some light to this, feel free to leave a comment. Feel free to leave a like. Feel free to subscribe. Feel free to share. Again, this is Wilk, Corpsumer Inc., Real Estate and Lifestyles channel. I definitely want to thank you for your time and patience. And yeah, peace. Corpsumer. I'm trying to get this business right for some years. But who really cares? Incorporated my company with 100 million shares. But who really cares? I taught myself to wholesale real estate in about a year. But who really cares? My trust revocable for the benefit of a chosen few. But who really there? Who really there? You?